All right, one stock we're also watching, we say in the commodity space, is Newmont Mining. So those shares are down by about 0.5%. Argus Research cutting its rating to hold from buy, saying the gold prices are trading near the top end of their 5-year range and might not substantially move higher. Joining us now from the BMO Global Metals and Mining Conference is Tom Palmer, President and CEO of Newmont. Hey, Tom, it's great to see you again. Thanks so much for joining.
Thanks for having me, Alix.
So basically, gold price isn't going to go much further from here, so therefore neither can your stock. What do you say to that from Argus?
Our stock is at a once-in-a-generational price. Last week was a big week for Newmont. We announced, following our big acquisition of Newcrest, a go-forward portfolio that's never been seen before in the gold industry. It's all tier one operations. It's got great exposure to copper. It's got some great projects sitting in behind it. If you come into Newmont stock now and ride the value with us, back us, you're going to go for a journey with us that will significantly increase that stock from where it is today.
Tom, I'm laughing because that was a CEO answer if I've ever heard one. On the flip side, though, you're looking at cutting the quarterly dividend when you reported, and you had to reset your dividend policy in part because you're absorbing Newcrest, and you have to sell a lot of assets to kind of make this acquisition happen, and you have to deal with synergies and stuff. Part of that is $2 billion in cash sale of assets. How's that going?
All going to plan, Alix. It's what we announced back in May of last year when we announced the deal. We said there'd be synergies. We said there'd be $2 billion of cash from portfolio optimization. We expected to adjust our capital allocation to match the transformed business. We'll get our balance sheet nice and fit. We'll pay a $1 a share base dividend. We'll get $2 billion of proceeds at least coming in from those divestments. And a good portion of that money will go towards our $1 billion share buyback. Everything consistent with what we announced in May of last year.
How soon do you think those divestments will come, Tom? And once they are done, where does that put Newmont next?
We committed to work through 6 assets that we held for divestment. We've worked through those for the course of the next 12 months. Process has started with 2 of them. There's a bunch in North America that will start in the next month or so. So we're on track, got clear plans to have that work through over the course of this year. Our focus is on delivering the value and the synergies from our go-forward Tier 1 portfolio. That's our focus for 2024. Get beyond that. We've got some very big copper-gold projects sitting in the wings waiting to increase our exposure to copper in 25, 26 and beyond. Really exciting time.
Are those new projects, are they of the same cost effectiveness as what you have now?
We have projects that are the envy of not only the gold mining industry, the mining industry. We have 3 big copper gold projects, one in British Columbia, one in Peru, one in Papua New Guinea. They are of a scale that is the match of any copper mining, gold mining company. A really exciting project pipeline that we have sitting there waiting to be implemented.
Mark Bristow might challenge you on that, Tom, but fair enough. Tom, I'm curious as to how running your business in terms of your input cost, your labor, your energy costs, what are you noticing? What's the trend? What's this year going to be for you on that front?
Everything's pretty consistent with what we're predicting for this year and probably pretty consistent with what we saw last year. So there is some stability in terms of our cost base. What also comes as we transform our business, we'll be about $1,300 an ounce this year is what we've guided to. But as we bring on new ounces and improve costs with our transformed portfolio over the next 2 or 3 years, we'll bring that down to $1,150 an ounce. So really strong margins out of our portfolio. So it's a combination of focus on cost, productivity improvements, but also new ounces that we're investing in to bring on board over the next 2 or 3 years.
Tom, as inflation sort of rolls over, as the Fed winds up cutting rates, have you had Bitcoin ETFs, maybe Ether ETFs coming onto the market? Do you feel like that's just going to, at some point, stop gold's rise? There are just other assets and other macro factors that's going to make gold as an asset class less appealing, which then filters down to Newmont stock?
We're pretty excited about the long-term view of gold. We wouldn't have the size of Tier 1 portfolio that we have. We've got 10 Tier 1 operations in our portfolio. We're very excited about the potential of gold, the long-term potential of gold. But the key is to have a margin to whatever that gold price is. So when you're running at $1,100, $1,200 an ounce, you've got a great margin, you're resilient, means you can be generating cash through the cycle, and that's our focus with our long-term portfolio.
Hey, Tom, great to see you. Thanks a lot for joining us. We really appreciate it. Tom Palmer, Newmont President and Chief Executive Officer, joining us from the BMO Capital Metals and Mining Conference.